Hello and welcome to the weekly market commentary. I'm your host Alex Chalekian of Lake Avenue Financial. Let's review the markets from last week. Markets crept higher for another week with the Dow closing at 17,958 last week and got close to the 18,000 point by hitting a high of 17,991. The S&P 500 was up 0.42%, the Dow Jones Industrial Average was up 0.78%, but the Nasdaq lost 0.22%. Now we also had earnings last week. Shares of Barnes & Noble plunged Thursday after posting second quarter earnings results that fell short of Wall Street expectations. But that wasn't the only reason shares dropped. Along with the poor bottom line results, Barnes & Noble also announced that it will end its agreement with Microsoft and that they will buy out the tech giant's stake in the Nook e-reader for about $125 million. Then shares of Royal Bank of Canada dropped last week even after they reported impressive fourth quarter results. Net income increased 11% year over year to $2.1 billion. Sears Holdings shares dropped after the company posted another loss along with a deteriorating top line in its third quarter results. The retailer's adjusted loss came narrower than the loss from the year-ago quarter. However, on a GAAP basis, the company's loss widened compared with the prior year period. Sales at Sears stores plunged 12%, while Kmart sales declined 7.2%. So far this year, Sears Holdings has shut down or declared the closure of nearly 235 stores, which were underperforming, with the most of them being Kmart stores. Lastly, we had Smith & Wesson shares, which rose after the gun manufacturer reported second quarter earnings results that were ahead of analyst expectations. Now, even though the company beat analyst expectations, sales fell 22% in the quarter because of weaker sales of a variety of firearms. In turn, the company cut its full-year sales targets to a range of $504 to $508 million, down from the $530 to $540 million. We also had some economic news last week. ISM and PMI manufacturing was at 58.7 and 54.8 respectively. Vehicle sales were up to 17.2 million. Construction spending was up 1.1% month over month. Unemployment was at 5.8%. Initial jobless claims were at 297,000. And factory orders were down 0.7%. Now let's take a look at the week ahead. This week we have reports on the retail sales, business inventories, and consumer sentiment. We're also going to get earnings reports from H&R Block, Hertz, AutoZone, Krispy Kreme, Costco, Restoration Hardware, Toll Brothers, Adobe Systems, and Lululemon. Now oil prices have been in the headlines lately. After OPEC failed to reach a consensus on cutting output, oil prices continue to decline. Given that no oil producers have signaled upcoming supply cuts, concerns have begun to arise regarding the impact of lower prices on the fiscal health of many of these nations. For such countries, oil prices are built into the government budgets, where revenues depend heavily on oil production and sales. Now, the Dow and the S&P 500 closed at record highs for the 34th time and 49th time this year, respectively. The impetus last week was a jobs report that far exceeded expectations. For the 10th consecutive month, more than 200,000 jobs have been created. That's the longest string of improvements since 1994, according to Reuters. Not only did U.S. employers hire the most new workers in 3 years, wages ticked higher too. Barron cited that the underlying report was promising. Analysts told CNBC that the strong jobs report might mean the Federal Reserve will begin to raise their Fed funds rate by mid-2015. Now, the ECB continued to talk a big game without taking any action. Last week, President Mario Draghi said the ECB plans to assess the success of its current stimulus programs as well as the effects of lower energy prices early in 2015. However, he offered no specific monetary easing measures or a timeline for action. It was the same message he delivered in October and November of 2014. Experts cited by the New York Times indicated the ECB could lose credibility if it fails to act early next year. Please share with us your thoughts on the ECB and if you think they're doing a good job. Thank you for watching our video. We'd love to hear your comments. Please visit our website, www.lakeavfinancial.com. Over there you can read some of our other blog posts and also subscribe to our newsletter. And remember, at Lake Avenue Financial, we manage your wealth with your goals in mind. Thank you.